HydePark this evening. We thought of talking about markets, the financial system. Globally, we saw several shifts in markets, how investors reacted to the pandemic, ongoing uncertainty and the situation globally. But in Sri Lanka, have we taken the right measures? Has the government stepped in? Has the regulator stepped in at the right time? How does the industry feel? How do investors feel about the entire situation? We'll discuss all about that at HydePark tonight. To discuss this, I've invited to our studios CEO of the Colombo Stock Exchange, Mr. Rajeeva Bandaranaike.
Hello.
A warm welcome. And also we have with us Chairman of Asia Securities, Mr. Dumith Fernando. Good evening and a warm welcome.
Yes.
And also CEO NDB Wealth Management, Mr. Prabodha Samarasekera. A warm welcome to you as well.
Thank you, Indeewari.
I think I would like to start off with Rajeeva. We've been talking about how pandemonium struck across markets globally, but still there has been, markets have continued to operate, investors continue to look at all these investment tools. Regardless of the pandemic, ongoing pandemic health crisis, in Sri Lanka, the stock market halted trading. Let's start off there. Now, the Securities and Exchange Commission did announce a number of relief measures for investors, for companies. How do you look at this? What is your analysis of the ongoing situation as we are ready to reopen trading at the stock exchange?
Yes, indeed. I think the good news is that we are ready to start on Monday, the 11th. Unfortunately, in Sri Lanka, we halted trading somewhere in March. And if you look at the other markets globally, they continue to operate. They took a bit of a fall initially when the pandemic first hit. But since then, we have seen almost all the markets bottoming out and recovering. So in a sense, we have missed that recovery period as well, and we've seen markets indices moving up again. Of course, Indeewari, we must also realize that there's a difference between what happened in Sri Lanka and the measures that the government took as against some of the markets in other jurisdictions. We had a very strict curfew as opposed to more of a lockdown in other countries. I think that prompted we were unable to operate in a normal sense as a result of the curfew that is being imposed, and the market didn't operate for the last 7 or 8 weeks as a result of that. Whereas in other countries, most other jurisdictions, I think even despite the lockdown, markets were permitted to operate, and we found that they were able to also carry out their equity market operations. Here in Sri Lanka, I think we couldn't get to that stage where we could operate during the curfew. One part of it being that the market was not deemed essential service, and as a result, the travel restrictions impacted on the market. If you are talking about the stock market operation, you are talking about entire ecosystem operating: issuers, brokers, stock exchange, margin providers, investment managers, etc., coming together the market to make the market work. And I think all of them should be able to freely operate.
But as a facilitator, do you believe that this was an opportunity lost for Sri Lanka?
I think if you look at markets, I think primarily markets should be continuous. We should not be closed. We should be operating. Because the reasonable expectation of investors, whether they be foreign or local, is that markets should be open for them to enter and exit. So the expectation of investors perhaps was not realized in closing the market. Because whether it be foreign or whether it be local investors, I think they have a reasonable anticipation of entering when they want to, and also liquidating the shares when they want to. So to that extent, I think we are all in agreement that market should not be closed and should remain open.
Certainly. I think it's definitely good news to Dumith and Prabodha that markets will reopen on Monday. With your global expertise, looking at what has happened globally, now Rajeeva says, yes, an opportunity lost, but there wasn't much we could have done given the situation with a curfew in place. But what do you think we could have done different?
Yeah. Look, I think that just to remind everyone, we closed the markets after the last trading session on March 20th. Now, leading up to that, initially a lot of the severely impacted countries, but then countries like ours followed suit in terms of markets being impacted negatively. If you want to get a little more technical, the volatility levels in markets, which are measured by volatility indices, were at an all-time high in a lot of these markets, higher than even the global financial crisis. So in that period of sort of second, third week of March, I think you really were facing the worst of markets. Now, there were two avenues people took. I think some markets stayed open and they took the hit up to that point. Some were down anywhere from 25 to 40%. But if you look at most of these markets, including emerging and frontier markets in Asia, if you take Thailand, if you take India, Pakistan, Vietnam, all the smaller frontier markets, they've all rebounded into double digits. So what we did had us closed from the time we reached the bottom. So it was unfortunate timing. So, in investment parlance, we say, buy low, sell high. We sort of sold low there, and then we shot up markets for a while. So I think that's not been ideal from an investor standpoint. As Rajeeva mentioned, when we operate a capital market, it is really a contractual agreement to allow people to continuously operate. So in fairness, there have been a number of concerns that I've read in the press. Not that anyone's officially told us this, but there have been concerns about foreign exchange outflows if panicked foreign sellers would get out of the market. Now, just to put things in context, the bond market, which is operated, has seen about $450 million of outflows year to date. As of March 20th, the equity market had only an outflow of $22 million. Last year, the bond markets had over $300 million of outflows. The equity market had outflows of only about $64 million. So as you can tell, yes, there could be outflows, but it really pales in comparison to some of the other markets which have been kept open. So I don't think there would have been an outsized impact on the rupee if we had kept this open. So as Rajeeva mentioned,
you mean the currency on the local currency? The impact wouldn't have been this bad.
I don't think it would have. It would have been smaller relative to some of the other markets, right? So in bond markets, as I said, almost $500 million have exited the local rupee bond market, foreign ownership. So that currency outflow would have been much greater than anything that might have happened here. Now, the story might be different now because I think this shutdown for over almost 2 months could add a risk premium to the holders, the foreign holders of Sri Lankan equities, and force them to sell, even if they did like holding the risk and the companies if the market was continuously operating. So we will have to wait and see. We'll keep our fingers crossed. We still think it's, there are positives, a lot of positives to this market, and we hope that investors see that way, and happy to talk about that as well. But my point is, I think, as Rajeeva said, we need to run continuous markets. The first week or so when, things in the budget, the curfew started, I think, yes, maybe we could have sorted out put our house in order by keeping the market closed. But this kind of length, I think we need to now think about what happens when we reopen.
So I think we've established that it is the opinion of all that market should have continued. But Prabodha, from fund managers to investors to from your side, how badly are you hit?
We are not hit at all because we are not only in the stock market, we invest in government securities, corporate bonds, and money markets. So the stock market is only one asset class that we invest on behalf of our clients. So it has only impacted the stock market funds that we run or stock market investments we make. But on the bond side and on the cash side, we've done really well. We've in fact got more money coming in because there seem to be a lot of money that have got printed and people are not spending much. So some of the monies that they are keeping in their bank accounts or as cash are coming into our funds. So as a company and as an industry, I think we have done pretty well. But just to add to what Dumith said, I think keeping the stock market closed for this long, I think it is a negative. This is my view, because it's really going to give a bad signal to the local investors as foreign investors. First, we need to ask the question as to why does this market exist? Why do markets exist? Stock market will exist to provide capital to businesses, where people who have excess capital will go and give it to companies, as well as liquidity. Now, that's a key part of a market. Now, after 20th March, people could not take money out, and therefore they did not have access to liquidity. And some people might have wanted money for various reasons, individuals or corporates, and they were not able to do that. And foreign investors might have been subject to similar kind of thinking, because people who invested in their funds would have wanted their money. So once you can't sell securities or asset you have and convert that into cash, it's really going to hurt a lot of people. So that, I think, is a negative, and I guess now it's already happened. Now we really need to see how we can control damage and try to kind of say why we did what we did and what we are going to do in the future to take the market forward.
Right, from negativity to a positive outlook, how do we transform the situation in our favor? We'll talk about that when we return after this short break at HydePark. Do stay with us. You're joining us at HydePark. Rajeeva, you were talking about what should have been done, but then I think from the industry there is an expectation that this negativity should be transformed. What should the government do? What should a regulator do? What policies, if you look at a positive outlook in terms of development, looking ahead in the long term, what do you expect here?
I think I'll take off where I think Prabodha just touched on it, on markets. Stock markets, it's an avenue to channel savings to investment. So it can play a fairly decisive and important role in the overall economy of the country. And I think right now, equity markets are grossly underutilized to that extent in terms of both on the funding side and the investment side. So I think if we are to make capital markets, particularly the equity side of it, the stock market, something that is important enough in the overall country and the Sri Lankan economy, I think both the government and the private sector should be utilizing the services of the equity market much more than what they have been doing even in the past. For example, we all know that the government requires funding. So the stock market can be a channel to fund the government projects, maybe in the way of a private-public partnership, maybe for existing state institutions, to fund both their equity and debt capital. And this is what other countries, other jurisdictions have very successfully done, and that's what really provides a liquidity to the market, the size of the market, and also provides a wider choice for investment, and thereby you also make it possible for the country to attract foreign investment, which it badly requires. So I think overall our equity market is, I would say, underutilized to that extent, and that's something that the government policy needs to consider as to how effectively they want to use the existing infrastructure. We have some very good infrastructure. We have an established investor base both locally and overseas. How do they tap into all this and make the best of the equity market there is, in order for the government and also following from the private sector to channel money into various investment projects, infrastructure projects, and also into other state institutions.
What policy changes do you recommend if the government is to consider what Rajeeva says?
So Rajeev brought up a very good point. I think some people have been talking about privatizations, but I think the better way of looking at, if you're looking at a new model, is to look at public-private partnerships, where it's not only the government that invests in a project. It's a private sector, or the suppliers also will invest in projects. I think this has been talked about by the President Secretary, Dr. P.B. Jayasundara, where you get other investors or your suppliers to share the risk. And that can be by way of equity, that can be by way of debt. And I think that's really a good model. And there are no political ramifications there because you're really not privatizing anything that's already functioning as a business or as a corporation. These are brand new projects, and this is a new model I think we can look at. And one avenue in channeling those monies or investments could be by way of the stock market or the bond markets in Sri Lanka.
Dumith, from looking at the global situation and in Sri Lanka, in order to navigate through this, the current uncertainty and also the missed opportunity, what policies and what directives would you expect?
Yeah, so I think addressing the current situation is still quite tricky in that there are a lot of unknowns, but I think there are 2 or 3 things. First I would touch on is about your first question, which is operating a market. When we had these shutdowns and curfews, I think one of the most important factors that came to light was how comfortable are we with operating the market. One of the things that we have been working at on the exchange in the last couple of years is introducing what we call delivery versus payment. Now, there were plans drawn up leading up to 2015 around delivery versus payment, establishing a centralized clearing party and so on. Now, these are technical matters, but what it does is it reduces settlement risk on the market. Now, if we had these in place, now a lot of those activities got stopped in 2015 and after that due to various reasons outside of the exchange's control. Now, a lot of those things need to be brought back, and we need to create a market that's up to the standard of international exchanges. And we have all the other parts. It's just this one piece that has to be introduced. And so I hope that this government will support the exchange in delivering those over the next few years. So that's in terms of the market infrastructure. On the side of how can we get a good market going? At the end of the day, if you have a good product, it will sell. I think the challenge we have right now is that the question around, is there a good product in the equity market? Now, I would argue there's a lot of good product there, a lot of good companies that you can go invest in. But what's held them back is liquidity. We've talked about this on a previous show. And I think the important thing here is to get more large companies operating, and then your question is, what can the government do to support that? I think Prabodha answered the question in terms of how state-owned companies through public-private partnerships can do some of that. I also do think we need to think about the opportunity in some very good unlisted, privately held, family-held companies that could actually be listed on the exchange. And listing on the exchange means you can raise capital from the public. You don't have to be dependent on a single source of financing like bank financing. You can give your employees a way to be incentivized through employee share ownership. You can actually find much faster ways of raising capital when you need to. But clearly some large unlisted companies have not felt the need to list. And I think there is an opportunity there to provide some incentives, either through tax incentives or other methods to get these companies to list as well. So if you have a vibrant market, which, as I said, going back to what I said initially, if you have good product to be sold, I think the buyers will come.
Yeah.
And we just need to make these products look very good and have more product on our shelves.
I think Rajeeva may have something to add to this too, from liquidity to investor participation and awareness. This is something that the Stock Exchange, the Securities and Exchange Commission has been speaking about as well, even before the crisis. What are we looking at now? How will we remodel our approach here in reviving the stock market?
I think in the very what we will see happening is we have been conducting a whole heap of awareness campaigns locally as well as overseas. So what the immediate shift we will see is that we will go into more electronic form in terms of webinars as against physical workshops and seminars that we have. But I think we will continue with those awareness activities and also try to digitize the product offer some more to make it more convenient for an investor to open and access the market, open an account online, and have an end-to-end process where he or she can complete the entirety of a transaction online. So I think this has also provided opportunity for the entire industry, including stockbrokers, to probably get more into online delivery as against physical delivery. So that's probably one of the shifts we will see taking place as we go on, maybe one of the positives of what really happened. And to that extent, we can then cater to a new segment of investors as well. So I think in a sense it has provided an opportunity for us to really reach out to a larger segment of people with a probably a more exciting product offer as well. Yeah.
Right. I'd like to speak more on private-public partnerships as well when we return after this short break at HydePark. Welcome back. As I did say, if we'd like to talk a little about the idea about bringing in public-private partnerships, how can we facilitate new entities to come in, and also looking at state-owned enterprises here?
Yeah, as we discussed in Indeewari, I think the opportunity is there for the government to use the stock market as a channel for both debt and equity as a source for sourcing of funds and capital. And I think this private-public partnership is one method that we can seek to introduce quite successfully. I think if you look at even certain other jurisdictions that have been very successfully done, and if you look at stock markets globally, we have seen that many of the public utilities and state-owned enterprises have effectively used the market to fund themselves, and that has seen on one hand these enterprises successfully funding themselves, and also has resulted in higher liquidity and increase in size of the stock market, thereby even widening the investor base they have. So I think this provides an ideal opportunity for both government and, as Dumith also mentioned, the private sector, larger companies, to make use of the debt and equity market for their funding requirements, and that's something that we should really be promoting and working on. Yeah.
And certainly looking at Sri Lanka's context, our state-owned enterprises, loss-making enterprises, this would be a way out also. Prabodha, I think you had something to add to the products. Dumith did mention, had the question, do we have good products here to attract investors?
So from a fund manager point of view, we invest in several asset classes or several products, that is fixed income, share market or equity, and then there are cash products. Now, as a unit trust industry or the mutual fund industry, for about 20 years, we were only offering equity funds. And by 2009, our fund total industry fund size was something like 10 to 15 billion. Then we went and did a survey, and we found out, see, there's a problem with, we can think equity is good, but the perception of equity or the investor appetite or Sri Lankans as a group of people, what do they like? What we have seen, or what that survey very clearly indicated, was that Sri Lanka is a bank deposit market. All of us, we get some money, we're very comfortable going and putting that money in a bank account. And then where would they invest? And the survey very clearly indicated that the next preference was for property and houses, and for things like gold. And equity really was considered something very high risk, and most of these people wanted capital protection. They didn't want to lose capital. When you buy stocks or bonds, you can lose capital. So that is something this market did not like. So to that extent, as an industry, we introduced something called a money market fund. A 10 billion rupee industry went to about 130 billion rupees in a very short time, because that's the kind of product they wanted. You know, very regular income, very safe, and very high levels of liquidity. And so we can talk about equity markets, we can talk about the stock market, but we really need to understand whether there's a demand for that particular product from the market, or how do we make that product attractive, and at what stage of a person's life or level of wealth can we make the stock market attractive? I think these are some of the questions that people who are working for the equity market or people who are involved in that industry need to really think about how do we position the equity market to appeal to the normal, ordinary people of this country.
Dumith, you may have something to add to that. How do we work about this? How do we make stock markets more appealing to the general public? Because we don't see a lot of interest in terms of investing in the stock market, looking at a long-term investment return. That is still not the practice here. But yes, we see retail investor participation, and there's more interest in the retail side. But I remember during our previous show, you addressed this issue. Let's talk about that a little.
Yeah, so I think, I think Prabodha mentioned they made some conclusions out of a survey done in 2009. I think we need to probably update that now. I think 11 years later, we probably can't draw the same conclusions. But I think his point is correct that there's overwhelming retail investors are overwhelmingly favoring capital protection products, so fixed income products, and then things like real estate. So there are 2 or 3 issues. One is investor education. You touched on this earlier with Rajeeva. Financial literacy levels are still pretty low. Although we have more than 2/3 of the population who has a bank account or a financial account, about 1/3 of them would claim to have financial literacy based on surveys that have been done. So, and as I've said before, I think it's not just the exchange and the government and the SEC's responsibility. I think the private sector industry has to do a lot more. We have seen very little in that front, and we're, for instance, starting now to invest and actually launching some financial literacy initiatives. Going directly to retail customers to do this, and that's not to favor promote any of our products, but to say how do you budget, how do you plan for your future, how do you grow your wealth, what are the products available, etc. So the education part is very important. The second part, I think, is comes back to making the equity asset class look more attractive. Now, what you saw after 2009, in the few years after that, there were a lot of reasons why markets flew, but certainly post-war there was a lot of optimism, and the equity markets started going up very fast. And at that stage, retail investors did come to the market in a big way. Right, so after that you've seen fairly calm markets which have not had strong performance years, and therefore interest wanes in that environment. So that's why I was saying earlier, what we need to do is make sure the value of companies that are listed is realized, and we bring more good companies rather than small companies that cannot perform very well. Bring good companies that will perform well, and in some ways, retail investors are somewhat, backward looking in their view. They need to see the equity market prove itself before they jump in. And then, with that coupled with investor education, which shows that over long periods, but the markets can perform for you, I think that's the way to do it. Now, if you look at other markets, generally over long periods of time, the equity asset class generates much stronger returns than fixed income asset classes. At one extreme, if you take the most liquid market, which is the US market, until before COVID-19 came along, the 10-year period before that, the S&P 500 stock index, if you invested in it, you made annualized a 13.5% return. Compared to having bond investments, you would have made low single-digit returns. So that's what a developed market looks like, and certainly we're not there yet, but we need to make sure that the equity asset class creates a track record of good performance. Otherwise, yes, you can't go and tell retail investors to come and invest in it.
Certainly. It's time we take a short break to return to the final few minutes on our program at HydePark. Welcome back. Prabodha, now we've seen that the online markets have developed, and it seems like this is going to be a permanent fixture. When it comes to markets, capital markets and the exchange, how can we look at this in a positive way as we look at a post-COVID-19 era?
Yes, Indeewari. This very good question. I think for financial markets, electronic trading to moving things around electronically is very easy. So I think the future is using these trading platforms, whether it's for markets or for banks, various financial platforms, because you don't have to move physical goods. You only move actually paper or electronic paper. So it's very easy to digitize this area, but there are several basic things that need to happen. One is the National Digital ID project needs to come about, where onboarding people to institutions or to platforms like the Colombo Stock Exchange can happen online, and verification should happen. So I think that kind of thing will make access to these products very easy, and there's a younger generation who's very used to these kinds of methods of transacting. So I think this is an area that I think as a country we should focus on.
From negativity to positivity, how do we ensure that we sustain, that we remain resilient throughout this difficult time and come out of it? I know that the SME sector, this is a big question. Will these companies survive the difficulty? But some may come out of it, some may find other ways to survive. What is your outlook for Sri Lanka, especially when we look at global markets and how we will come out of this, and for specific sectors, Dumith?
Yeah, that's a good question, and I think we'll keep learning about the right answers to this over time. But I think we know a few things already. Certainly, areas like the leisure sector are going to be somewhat challenged because that depends a lot on global travel. But I will say a lot of our export sectors over the next, certainly in third quarter and beyond, you should see those rebounding. Most of our key export destinations are now looking at reopening in June over the next few weeks. Once that happens and once the export demand returns, I think there will be opportunity there as well, because with a slightly depreciated currency now, our exports are actually a little bit cheaper for foreigners to buy than it used to be before COVID-19. We've also seen some big behavioral changes in how consumers behave in Sri Lanka, and one of the important things has been the migration to e-commerce platforms. So the consumer who went to the supermarket before is now not going anymore. So we did an e-commerce survey recently which said, before COVID, 80% of people said they bought their foodstuffs and other important items at the supermarket, and only about 10% that said they would use retail. In this survey, we have 53% of people saying that they would continue to use e-commerce after COVID-19. So I think that's going to be a change that will help people in those industries. But also help people, the consumers who are concerned about social gatherings and things like that. So there again, I think digital payments will have to be an important part of it. I think last mile logistics is an important part to be solved. But at the moment, actually, we're seeing quite a bit of interest from our corporate clients who are looking at investing in or acquiring some of these early stage companies in the e-commerce sector or logistics. So I think there's a lot of positive outlook there. In terms of traditional sectors, clearly your consumer sector, people will still eat and drink. So companies in that sector will do well. And finally, I would say the telecom sector, which should do well in the long term with the migration to data-based work, whether it's online work, working from home, and other users like that.
Very quickly to Rajeeva, we see that the S&P rating agencies, Fitch, Moody's, this is a broader question about the economy. GDP, the hit to Sri Lanka's GDP. When USA debt to GDP is 256%, private sector debt to GDP is 150%, UK larger, but Sri Lanka is the target. Sri Lanka's ratings downgraded, outlook downgraded, but you remain positive about a better outlook for Sri Lanka. How can we end the show tonight?
Yeah, of course. I think there's a lot of potential if you really see in Sri Lanka, despite some of the numbers that have been quoted. And if you look at our corporate sector, I think we are a very resilient economy to that extent. And we have seen even our corporates very quickly responding and bouncing back to even respond to the COVID-19 crisis and coming out on top, as it were. So I think we are quite upbeat that both the private sector and the institutions in the state sector will be able to respond and continue the resiliency that Sri Lanka has shown over the years.
Thank you very much. We had with us Rajeeva Bandaranaike, CEO of the Colombo Stock Exchange, Dumith Fernando, Chairman of Asia's Securities, as well as Prabodha Samarasekera, CEO of NDB Wealth Management. Thank you for watching us at Hyde Park. We'll see you again next week with yet another broader topic to discuss about Sri Lanka and the way forward.